From my years of experience with traders in the market as a mentor, I have come to realize that the greatest headache for traders is how to determine the bias of the market every single day. Irrespective of the strategy you are using, if you do not understand or determine in advance where the market is heading, it is very, very likely that you will be clicking the wrong button either to buy or to sell. And that is why in this video, you actually need to pay attention and stick with me to the end, because I'm going to show you the most simplistic way to determine your daily bias using only one daily candlestick. Okay? Now, this is not some form of random video for you to just watch and say, well, I've seen this before. I bet you, if you can master what I'm about to show to you today, your trading will dramatically change. You'll become a master of the market, because once you understand where the market is heading for a particular day, then you can apply your strategy and it will become easily executable. So let me take you to the whiteboard and show you how you can actually determine the daily bias in a very simple way. Okay, so take a look at these schematic diagrams before you. First of all, if you want to determine the daily bias, all you need to do is to want to wait for a candle to close above the previous day's candle in a particular direction. For example, in a bullish direction, look at this candle, this bullish candle. Now the next candle closed above. If you look at this bullish candle, this first bullish candle, it did not close above this previous daily candle. It did not close below either. So it is an inside bar. It does not really matter whether it is an inside bar or not. The fact is that this is a daily candle and it carries a lot of data. All right. So you wait for price to close above it. As you can see, it happened with this candle. Once you see this candle will tell you that the following day, price action is likely to be bullish. But we do not just want to randomly believe that price action is going to be bullish. We want to position ourselves as professionals to know whether the market will go bullish or not. And how do you do that? That's what I want to teach you here in this class. Now, once you find a candle that has closed above the previous daily candle, pick your horizontal ray tool and mark the close of that candle. Remember, this is a bullish candle. Bullish candle opens below and closes above. So that close is what you mark. Just put a line there, a horizontal line across. That's all you need the daily time frame for. What you need to do next is to switch to the 1H time frame. You want to see price trading above it, not during Asia. There is a specific time that you want to see price above this horizontal line, and that should be during the London key zone or the New York key zone. The time window for London key zone, if you are going to really determine the daily bias using this concept, the time window I'm going to give you, please pay attention, is going to be 2 a.m. to 3:59 a.m. Eastern. If it is the New York key zone, it's going to be 7 a.m. to 8:59 a.m. Eastern time. Remember, the closure above that I'm talking about, I'm not talking about a small body closing above this horizontal line. No. I'm talking about a full body candle closing above this previous day's close. Okay? I want to see a convincing candle closing above. If price now, I want you to also understand something, that when price opens the next day, it will first travel back down. 70 to 80% of the time, it will first travel back down before expanding higher. But we are not interested in the coming back down before expanding higher. We want to be sure that once price begins to trade above this line during the London key zone, it therefore shows that price is ready to go higher. We don't want to see it trade below this close of the previous day's candle during the London and New York time. So I hope you understand that. The same thing in a bearish condition. Immediately you find that price has closed below this previous candle. It doesn't matter. The color here does not matter. Price has closed below. That should give you a fair idea that the following day we are expecting bearish price action. Okay? So what you do is to grab your horizontal ray tool and mark it at the close. Remember, bearish candle opens above and closes below. So you mark it from below here, from the close. Stretch it out. That's all you need. And you need to switch to the 1 hour time frame. Once you get to your 1 hour time frame and you see price trading below this very horizontal line at specific time, which is the London key zone or the New York key zone, I've told you the time windows. Stick to those time windows, because if you don't, you will be making yourself a great harm in the market. So you want to see price trading below, and then with any strategy that resonates with you, you can use to take price going lower. So now I want to take you to the live chart and show you exactly how to approach it from this explanation. Okay, so this is the daily time frame. Look at what is happening here, right here. Let your eyes be here. Okay, once you find a scenario like this where this candle takes out the previous day's candle, sorry for my drawing, let us draw it properly. I just want your eyes to be there. So once you see this kind of thing happening in the market, price taking out the previous day's candle, it may not be a daily candle, it could be 1 hour candle, it could be 15 minutes candle. Once you find this scenario, it should give you some form of message that price is about to reverse and start going back higher. As you can see, price was dropping before it created or it painted this candle pattern here. So this is strong reversal pattern, but that's not what we're discussing about today. We are talking about how to determine the bias of the market in a continuation scenario. Okay, so now in that case, we want to wait for price to close above this very candle that has swept liquidity, and as you can see, this next candle closed above it. So that gives us a fair idea that price the following day will be going higher. But we do not just want to believe that price will go higher. We want to do something to be able to determine precisely that price will go higher. Now, what you need to do is to grab your horizontal ray tool, mark it from the close, that close of that candle, mark it out. Just make sure you stretch it out, just like so, as you can see. So when you stretch it out like that, let's assume we didn't see anything on the right hand side. Okay, you don't need to wait to see anything on the right hand side. So once you mark out that close of this candle, we want to trade on the 21st of October. Now, let's put a vertical line there so that we don't miss track. This is 21st of October 2025. And therefore, once you do that, that's all you need for the daily time frame. All you need now do is to switch to the 1H time frame. So we want to see price clearly trading above this horizontal line during the London or New York key zone. And I've told you the time window. So we go to the 1H now. So this is the 1H now. This is the vertical line. And let's bring in our session indicator here now. So this is our indicator, session indicator. You can find that on TradingView. Any of them will be useful to you. So we want to trade on the 21st. Now, this is this pink box that you see is the London key zone and this is the New York key zone. Now we want to trade on the 21st, but this is the 20th, so we can actually move this horizontal line to the 21st. As you can see, this 21st. All right, and I said price has to trade above this horizontal line during the London or New York key zones, and as you can see, price clearly is trading above. So you want, that's all you need on the 1H time frame, because this will give you 70 to 80% assurance that once price is trading above this horizontal line, which is the close of the previous day's candle, you will be too sure that on the 5M you will get a trade setup to go long. So let's get to the 5M now. We are not entering our trade using the 1H, so we are going to the 5M. So let's get to the 5M now. Okay, so this is the 5M, and as you can see, this is our horizontal line. Price is clearly trading above it, and this is the London key zone. Now, because we want to take trade here, remember, you are taking trade within this key zone. Okay, so because we want to take trade here, all you need to do is to look for your strategy. This is where you now can apply your strategy and it will work. Okay, because now you have been able to determine the bias of the market, that the market is bullish. Then your strategy can actually work now for you. For example, like me, if I wanted to take this trade, look at this. This is a structure low and price came back down to take out this structure low. I'm just showing you, okay? There are other things you need to apply before you use it this way, but I'm just showing you that that's the way I trade. Okay, now because price has swept this structure low here, I was going to take my trade here going long. Simple. You can take it from this top, but I want to take it at the close here, which will give me a better risk to reward. And now you have to give a buffer to your trade. The next thing I want to tell you is that this strategy uses 1 to 3. Your target should be 1 to 3. We don't want to gamble in the market. We want to take little chunks from the market and become very successful trader. So after 1 to 3, you can actually trail your stop. If you want to maximize profit, you trail your stop. And as you can see, let me just show it to you. As you can see, there was massive bullish run, all right, throughout that day. Can you see that? So this is what you get when you understand the daily bias. So this is the first example. Let me take you back to the daily time frame and show you some more examples. Okay, so the next candle, this candle now has closed above this previous candle's high. Okay, now we want to trade the following day going long, but we want to determine whether price will actually go long from there. So what do? Grab your horizontal rate tool and then mark the high, the close of this candle. Once you mark the close of that candle, you will now go to your 1H and you want to wait for price to trade above the close of this previous day's candle. Okay, that is on the 1H. Once you can determine that on the 1H, then you can go to the 5M to take your trade. So let's put a vertical line there so we can know the day we want to trade. Here we want to trade on the 22nd of October, which was Wednesday. So we now can go to the 1H time frame. Now we want to trade when price has clearly closed above this high or is trading above this high during the London or New York key zones. So now, as you can see, we are trading on the 22nd, but this is 21st. So our London key zone, which signifies 22nd, is here. Now take a look at it, this, guys. Think about it yourself. Look at during the London key zone, did you have any price trading above this horizontal line? Certainly no. How about in the New York session? Look at it. The New York session barely closed above. This is not even a closure, because if you take the high of this candle, this previous day's candle, and you stretch it out, you will discover that this is just a sweep. It didn't really close above. So you didn't have any opportunity here to go short because it didn't give us what we wanted. Now, one more thing that this concept does for you is that it keeps you away from bad trades. So we didn't have any opportunity here to enter the market that day, and which is completely fine. So we now can go back to the daily time frame and let me show you some more examples. Okay, so you can see that this candle on this day, we didn't have any opportunity to enter the market. Now, let's continue. We are still going to use this candle. This candle's candle close. All right, even though it's an inside bar, but this is a daily candle. So this is the candle close of this previous day. So we want to trade on the 23rd of October. Let's put a vertical line there so we don't make mistakes. So we want to trade on the 23rd of October 2025. So now that's all you need to do on the daily time frame. Let's get to the 1H time frame now. Now remember that on the 1H time frame, we want to see price trading above this horizontal line during the London or New York key zones. Now, we said we are trading on the 23rd. This is 22, so the 23rd is somewhere around here. So this is the 23rd. And as you can see, price is clearly trading above this horizontal line, which makes it perfect for us. So now that we have determined that one on the 1H time frame, we can simply go to the 5M, use our strategy to enter the market with. Simple. So this is the 5M time frame. As you can see, look at the massive uptrend here. Why? Because we have already confirmed from the 1H time frame that price is trading higher. For example, if I were to take this trade, all I will do is to take my trade from here, okay, right from here, and just put my stop loss here, 1 to 3. Simple. Let's see, 1 to 3. Yeah, 1 to 3. Simple. And as you can see, price actually hit it. Let's see. You don't need to complicate anything. Simple thing. Can you see? 1 to 3. And you get out of the market. Let's get back to the 1H. Maybe this time we do a bearish condition so you can know that we are not just cherry picking. Okay, so let's do the bearish scenario so you can understand what we're talking about. Now let me just quickly do this one here. As you can see, price has actually closed below this low, this daily candle low. As you can see, it also closed below this very low. We're expecting bearish price action. But how do we determine that clearly? This is it. We use rule-based system here. So take your horizontal ray, mark it there. Remember, bearish candle opens above and closes here. That's why we just marked there. And so put a vertical line there so we can track price on the lower time frame. So we are going to be trading on the 16th of October. 16th of October. What do we want to do? When we switch to the 1H time frame, we want to see price clearly trading below the close of this previous daily candle. Okay, if we don't see it trading below clearly during the London or New York key zones, we are not interested in engaging the market. It's as simple as that. So what do we do? Now let's get to the 1H. So this is the 1H, and this is the vertical line that we drew, and we said we need to wait for price to clearly trade below this very horizontal line, okay, which is the close of the previous day's candle, and we want to trade on the 16th. And as you can see, this is the 16th, and we want to trade within these key zones. Anything outside of the key zone, we are not interested. And remember the time windows the time window I told you about. Okay, now as you can see, during the London key zone, did you see price trade below this line? Certainly no. So why will you engage the market here? That's why I'm telling you that this concept keeps you away from bad trades. Now, during the New York Q zone, did you find price trade below this horizontal line? Certainly no. Price started closing below the horizontal line after the New York Q zone is closed. And I've told you, if you are taking trade within the New York Q zone, it has to be between 7 a.m. to 8:59 a.m. Eastern. And as you can see, this is not 8:59 a.m. This is actually 10 a.m. Eastern time, which is clearly outside of our time window. So we couldn't have taken any trade here. All right? I hope you understand. Please just go back and backtest on what I've told you now. You will find out that the simplest way for you to know where price is going is just what I've told you now. Forget about every other concept you have about identifying or determining your daily buyers. This is the most simplistic way to identify your daily buyers. But before we go further, if you are new to our channel, please give us your subscription and turn on the notification so that anytime we publish a new video, you'll be notified about it. And if you haven't joined our free Telegram channel, please do so just immediately, because there we post high probability trade setups most of the time, and that you can take advantage of it to make money for yourself. Okay? And again, please, if you are enjoying this video, give us your like. I noticed that you guys just watch our videos and walk away. The least you can do for us is to give us your like. Please do so. All right? So that the YouTube algorithm can now recommend the video to other people. Okay, guys. Let me do one more example. Let's get to the daily time frame, and let me do one more bearish example if I can find. Okay, so this is another example, a bearish example. Now I said wait for price to close below. As you can see, it clearly closed below. It started closing below from here, but let's just do the most current price action. This one has closed below, and therefore what do we do? Or let's do with this one. This one closed below this one. So what do we do? Use your horizontal ray to mark out the close of that candle. Just stretch it out, just like so. We want to trade on this day, which is the 28th of October 2025. So use the vertical line so that we don't miss track. Just place it there, 28th of October. Now, once you have done that on the daily time frame, we go to the 1H time frame. So we want to trade on the 28th of October, and that's the 28th, okay? But look at it. Within this London key zone, look at where price closed. Look at the size of the body of this candle above this line. Look at it. And look at the part of it below this line. This is not a convincing closure. I want to see a convincing closure. So it didn't happen there. And this is 4 a.m. Eastern time, which is clearly way out of our time window. Okay? So now we now go to the New York key zone. Yes, we can now trade going short on the New York key zone because price has clearly traded below this vertical line. I mean this horizontal line, which is the close of the previous day's candle. Okay, so once you have noticed that on the 1H, you can go to the 5M now to take your trade using any strategy. This is the 5M. Where are we on the 5M? Right here. So you can see on the 5M, you can now look for your entry. And as you can see, look at the massive push to the downside. Look at it. Once it trades below this line or above this line, you can be sure that that day price is going to go massively bullish. And so how will you have taken this trade here if you wanted to trade it? Well, the way you could have taken this trade is very simple. Look at this. This is your OP here. I'm not showing you any strategy, but I'm just showing you something that you could have taken. Okay? So you could have taken this trade right here. This will be your entry. What am I doing? I'm going short. I'm taking a long tool. So you could have taken your entry here, going short, and you target 1 to 3, you will have the confidence that your trade, give a buffer, that your trade will go your direction. So all you need to do is target 1 to 3. So after this 1 to 3, you can continue to trail your stops and get maximum profit in this trade. Look at it. Look at it, guys. Think about it. This is massive. Simple, straightforward concept that can help your trading tremendously. All right, guys, we are going to drop it here. I hope you enjoyed the concept. Please put it into practice, back test on it. Don't take my words for it, and then you'll be amazed. I see you in our next video. Thanks for watching.